Is Warren Buffett preparing for a crash just like 2007? Well, take a look at this graph. It shows Berkshire Hathaway's cash allocation. And as you can see, Berkshire Hathaway right now has a greater cash position than it had leading into the 2008 financial crisis. And when you take a look at things like YouTube, with videos like these, Warren Buffett preparing for a crash like 2007, times two, why Warren Buffett is preparing for a stock market crash, and Warren Buffett preparing for an upcoming crash, well, imagine being in the position where you are looking at these videos or looking at articles like this one from Barron that states Warren Buffett is raising cash. And then imagine contrasting that one with one like this one. Buffett's $325 billion cash hoard is an early warning signal. And thinking to yourself, what should I do? Why is Warren Buffett accumulating cash and selling all of his investments? And then imagine you see articles like this one, why Warren Buffett sold more Apple stock and is raising so much cash. And I keep confusing the words cash and crash because in this case, they seem to be being used as if cash is a signal for a crash. And this would have any amateur investor thinking, should I be selling all my Apple stock? And should I be preparing in the same way that Buffett is? But the insinuation that getting out of stocks and waiting for that crash that's inevitable could actually cause significantly more harm than good. Because there's more to the story than Buffett is just seeing the early warning signs of another big financial crash. There are specific things happening within his portfolio, and there's more to the story of why he's collecting so much cash. And it doesn't so much have to do with the fact that he's selling everything. It's to do with specific metrics in his portfolio that he's adjusting, more than likely due just to the normal course of business. And I want to go through everything that's happening with Berkshire Hathaway's portfolio and all the news associated with Berkshire Hathaway's massive cash hoard, because it's not what you think. And on this episode of Truth or Scare, we're going to unpack the real truth about what is going on with Warren Buffett and Berkshire Hathaway. But before we get into it, my name is Nolan Matthias, and if you want the truth, the real truth about finances, and you believe that there is opportunity in crises, then this is the place for you. So do me a favor, hit that subscribe button and hit the like button so more people like you can see this video. Okay, so let's get into it. Let's discuss what's really going on here. And let's talk about whether Warren Buffett is intentionally hoarding cash, waiting for a massive stock market crash. And the truth is, this probably isn't the case. You see, there's a couple of things that have happened with Berkshire Hathaway's portfolio that are making the moves that he is making quite obvious if you know what to look for. I want to start by showing you two things. I want to start by looking at his cash holdings, and more specifically what those cash holdings might be. And then I want to show you why he probably sold the Apple stock. And it's not because he was trying to free up cash for the inevitable crash. No, it's nothing like that at all. So let's start by taking a look at some financial metrics on Berkshire Hathaway. Let's start with cash and short-term investments and the net income, so the cash flow of Berkshire Hathaway over the last little while. And this is where it becomes really apparent that, yes, Berkshire Hathaway is holding a significant amount of cash, $325 billion to be exact. But there's a couple of things to note here. Since essentially November of 2022, Berkshire Hathaway has been making a lot of money. They've been earning a lot of income. Most of that, in all likelihood, from dividends of the companies that it holds. And that alone has seen Berkshire Hathaway's cash and cash equivalents go up quite substantially. In fact, it probably accounts for about half of the increase in the Berkshire Hathaway cash holdings. But then you see in March of 2024, the cash holdings go through the roof. And yes, that is due to the divestment of a couple of investments, the primary one being Apple. Now, in the normal course of business for Berkshire Hathaway, as they received cash from the sale of businesses or as they received cash from normal operating income, they would take that cash and they would buy more investments. However, the real story here isn't that Berkshire Hathaway is hoarding cash, it's that they've just simply stopped buying. And they've done some rebalancing in their portfolio to make up for a pretty significant issue in their portfolio, which was the massive amount of holdings they had in Apple. In fact, the primary reason why Berkshire Hathaway has likely sold so much Apple stock is not because they believe it's overvalued, but because it has become such a large percentage of their portfolio. And in all likelihood, the sale of the Apple stock was really just a rebalancing of the portfolio. And I'll show you exactly where the problem begins. So this is a chart that is incredibly well done. It comes from a website called ValueSider, and it shows the portfolio holdings of Berkshire Hathaway. Now, as you can see, as of Q3 2024, Berkshire Hathaway's holdings of Apple are about 25%. Now, we know that at the beginning of this year, they started to sell a pretty significant amount of their holdings in Apple. And if we turn back the clock here to late 2023, you can see the problem. The problem is that Apple started to make up about 50% of the value of Berkshire Hathaway's portfolio. Now, this isn't because Berkshire Hathaway was going out and buying a ton of Apple stock. It is because the Apple stock had gone up significantly in value relative to the rest of the portfolio. So when it comes to the sale of the Apple stock, it's highly unlikely that Buffett sold the Apple stock because he was trying to hoard cash for the next big crash, but more that he was simply trying to limit the exposure that Berkshire Hathaway had to any one single stock. And Buffett's done this before. He's limited his exposure to single stocks in the past by selling when they became too big compared to other holdings. So the question of why he sold Apple is likely less to do with hoarding cash and more to do with limiting exposure to a single stock. But then that leads us to the next question, which is why has Berkshire Hathaway stopped buying stocks? Which is what they would normally do when they had cash available. And the answer to that is likely due to a belief that stocks right now are overvalued. And one of the indicators that Buffett is most well known for, in fact, it's named after him, is the Buffett indicator. Now, in recent years, Buffett has said that you shouldn't rely on any single indicator because no single indicator is always the perfect fortune teller of what's going to happen in a market. However, this specific indicator may provide some clues on why Buffett isn't buying, because the Buffett indicator is a measure of the total value of the stock market divided by GDP. And when the total value of the stock market is double that of the US GDP, that tends to be an early warning sign that the economy is in trouble. And when it gets significantly higher than that, it tends to be an indicator that the stock market is significantly overvalued. And when you take a look at this metric, you can see that it is the highest that it has been in recent history. In fact, right now, the total value of the stock market compared to the total GDP of the United States is significantly higher than it was just prior to the 2008 financial crisis and the 1999-2000 bursting of the dot-com bubble. So this may be why Buffett is sitting on the sidelines. He may simply not be able to find the deals that he is looking for, and therefore he's waiting for when those deals start to happen. So while he may think that stocks are overvalued, his hoarding of cash may not necessarily be an indicator that he thinks a crash is coming. And in fact, the reality is that even though Buffett is selling to rebalance his portfolio, there are certain stocks he is buying. Things like Pool Corp, Domino's Pizza, SiriusXM, Ultra Beauty, Liberty Media, and others. So the accumulation of cash, it seems, is more about waiting for the right opportunity to come along. Now, the real fear here is that people see all of these articles and these videos, and they start to cash out their stocks in order to wait for this massive collapse so that they can buy in at the lowest prices, timing the market and making out like a bandit. But trying to time the market, I'll tell you right now, is a fool's errand. And one thing that is important to keep in mind is that Buffett isn't selling all of his stocks. He's rebalancing his portfolio, yes, but he's not getting rid of anything. And then what's also important to note is that when you look at the amount of cash that Buffett is holding, it is not just cash, but cash equivalents. And a lot of the cash that he is holding is in short-term treasuries, which actually earns an income. In fact, it could be argued that Buffett is doing the same sort of portfolio rebalancing that Ray Dalio suggests when it comes to the all-weather portfolio, where you're consistently rebalancing stocks, bonds, commodities, and other things in order to mitigate your risk. And it seems that that is exactly what Buffett is doing right now. He is not hoarding cash, he's simply mitigating his risk by not allowing one single stock to overrun his portfolio. So the truth here is that Buffett's actions shouldn't be actions that are seen as scary. In fact, it's quite the opposite. They should be seen as a sign that the best thing you can do when things get a little bit frothy is not to check out of the market completely, but to prepare for what comes next. Be proactive, make sure that all of your money isn't in any one or two investments, and make sure that you're diversified. Because we don't know if there's going to be a massive stock market crash. Nobody has that crystal ball. But what we do know is that when our portfolios get out of balance, it increases our risk. And when we increase our risk, if something bad does happen, that's when investors get hurt in the worst possible ways. So Buffett's cash hoarding, it actually isn't cash hoarding. It's just simply the fact that he's got so much money coming in right now due to rebalancing in income, and he doesn't have the opportunities that he likes, so he's just simply doing nothing. And if there is in fact a crash, he's going to be prepared, just like he always is. Oh, and by the way, if you want to see what always happens before a major financial crash, make sure you check out this video right here.